Hi, this is your host, Andrew Raffel, the founder and CEO of Baintree Wealth Advisors. And I want to welcome you to the Your Wealth and Beyond podcast, a show that was created to help you simplify the financial world and to ensure that you're living your best life now and in retirement. Each show, we're going to be bringing on experts that are going to help you build wealth and, most importantly, find purpose in what matters most.
And welcome, everybody, to another episode of Your Wealth and Beyond. Today, I am super excited. A couple of points. One is this is our 30th episode today. Secondly, this is the first time we're doing it live on video. And third, I've got a good friend, somebody I respect and somebody I've known for a long time, Zach Kepes, on the show today to talk all things real estate, work ethic, entrepreneurship. Zach, welcome to the show. How you doing today, my friend?
Doing amazing, Andrew. Thank you so much for the opportunity of having me on. It's always great to see you and excited.
You clean up so well. I love it.
This special occasion to be with my buddy.
There we go. So as the listeners know, the Your Wealth and Beyond podcast is built to help each and every one of us build wealth and find purpose. And today we want to talk through with you, Zach, on how you've built a real estate, I'm going to call it an empire, but how you came from failure, where you came from the depths of the Great Recession, how you picked yourself up and were able to build this through blood, sweat, and tears. So that work ethic is something that I think a lot of us, we want to have, but it's not for everybody, right? So entrepreneurship, right? You've basically an entrepreneur. You run Zak Ventures. Yeah. Zak Ventures has been in existence now since when?
2002. So 17 years.
Okay, so you've been in the real estate. How did you get into real estate? What was that a passion growing up for you in Michigan?
Sure. Talking about entrepreneurs, I grew up and blessed that I was socialized in a family of entrepreneurs. My father started his own law business. My grandfathers both had their own individual scrap business, and then multiple business on my other grandfather's side in terms of development and random businesses, always looking at different opportunities. One of my grandfathers literally drove around with a checkbook in his pocket, looking at deals ready for execution, with the ammunition to go out there and acquire deals or buy businesses.
And this was back in the Detroit area?
Back in the Detroit area, Midwest guys. Yeah.
So this was instilled.
You're a Midwest guy, right?
I am. The great city of Cleveland. We call it Rust Belt chic.
Okay.
And all you guys are now jumping on the Cleveland Browns bandwagon. But I've been there from the get-go. And it's funny, my daughter, who's, Winter, she's almost 13, and she's been, for years, she'd make fun of me for Daddy, how do you watch the Browns, and why are you always crying on Sundays? So now that they're actually got this momentum, she's trying to jump on the bandwagon.
Sure.
I'm not letting her jump on right now. She's going to have to work for it. But I regress. Cleveland, Detroit.
We got the Lions. I can feel your sympathy. It's been a tough run.
Tough. But what we learned in those cities is nothing's given to us. Yeah. We got to work hard. And so you saw that with your grandparent and your dad is just and still of looking out and working hard, but then understanding the real estate business. Is that how you kind of got your foray into it?
Yeah, again, growing up and going back to the Detroit days, I always knew I wanted to be an entrepreneur. I wanted the ability to work for myself. Unfortunately, I don't like people telling me what to do. So I always knew that I wanted to create my own fortune and follow my passion. I had a bagel business growing up. I'd shovel snow. I would sell bracelets. As a kid, you either have it in your blood or you kind of don't. It was always kind of in my blood, and always knew that I wanted to create, some sort of opportunity.
Yeah, we say entrepreneurship. There's a trait that for most it's missing from other people, and it's whether we're crazy, whether we're not. But we have something where, like you said earlier, you can't work for somebody. You can't be told what to do. So, and every day you got to look in the mirror, and it's on you to make things happen, which is, for some people, they just don't have it in them.
Right.
So you moved out here to Phoenix, how many years ago?
Yeah, I came out literally 2002 in August, super hot. And I came off the airplane. I'm like, what am I doing here? This is ridiculous.
But you're young at the time. You didn't really have responsibility, and you're just like, let's see if it works.
Absolutely. You got to put yourself out there. No risk, no reward.
Yeah, I've been out here now almost 20 years. It's easy for us. We could have ended up in Chicago or Los Angeles or New York. But, this is a city that it's easy living here, right? You deal with the heat, but it's boom bust. And so part of what we'll get into today is on the real estate side, especially with Phoenix, has been through many cycles. We've seen in our time pretty much one major one, right?
Absolutely.
But so you came out in 2002 and you're just like, I'm going to just jump right in. And that's when you built Zak Ventures as such a young lad?
It wasn't really, I wouldn't say Zak Ventures was started. Yeah, Zak Ventures was a piece of what I did from 2002, but I started as a joint venture with cousins and my uncle out here. So I was blessed to have some capital behind me at the time from 2002 to 2007 till the market basically imploded. As you know, as a Midwest guy, and one of the reasons I was friends with you early on, we met, I think, playing basketball or something at the gym?
Yep.
Yeah, and the thing that I love about you, Andrew, and still to this day is you're a hustler. We get up every day and we hustle. Nothing, you weren't given your fortune. I wasn't given anything. And so we wake up every day with that mindset of, getting after it. And
how would you teach? So if somebody comes to you and says, Zach, how do you do that? What would you say to them?
I think it's more or less an innate ability. It's something that's, intangible. It's instilled in you as an age, or you have to have that fire and know that, hey, this is something, the risk that I want to take. Some people just knowing they want that paycheck and they don't want to think after work 9 to 5, and it works for them. And I respect that. Yeah. And just because, that's what they like doesn't mean in terms of success, it is what you make it. I mean, it's success comes not just in capital. It's, are you happy? Do you love what you're doing?
Yeah. And so when you started working with the family, you were out there just looking at deals, whether it be residential deals, commercial deals, but you just jumped feet first and just tried to learn what the lay of the land here in Phoenix and trying to figure out what deals are going to work?
Sure. It was mostly single family residential. We were looking at distressed stuff early on in the days. That was kind of emulating their business model in the Midwest out here. So they were looking for diversification with their business, capitalize on another market that was set to boom. And it did. From 2002 to 2007 and 8, our market went from here to here, which was a crazy ride. It was a lot of fun. You could virtually throw a dart at a wall. You're going to hit something and you would make money because the market was appreciating so quickly.
Right. And as young as you were to come in and have that success, you probably think that, hey, this is how it is. And you potentially get a little cocky and makes some riskier bets. Is that what happened? You just kept thinking it's going to continue?
Yes and no. I mean, obviously, when you're on that wave, you think, hey, we're just going to ride this all the way to the beach. I'm blessed that things happen for a reason. I'm not happy about the market imploding then, but you learn from every lesson. It wasn't that we got ahead of ourselves and saying, all right, we're going to go from $200,000 homes and to go speculate on big commercial buildings, which at the very end, we had some options and diversification with larger deals. But like Warren Buffett says, stay within your circumference of understanding of your competence. I mean, I believe that today. It's easy. You make a few dollars and you get cocky and you want to start, think you want to make $1 million overnight. It doesn't happen. My wealth was built one property at a time, low income, and that's my niche. It's easy, again, to get distracted on a day-to-day basis and think that maybe you throw your money in a stock that you hear as a whisper could be an amazing opportunity. Right. But again, I'm very conservative, and I don't look to hit home runs. I aim for solid singles and stay within my circle of understanding.
And so we'll talk about the success you've had over the last 8-9 years. But let's go into that 07, 08. So it affected a lot of people, the Great Recession, and real estate. It obviously, and out here, it affected a lot of people, whether in the mortgage industry, real estate, developers, etc. Did you have a sense that it was it a slow train wreck, or when did you finally realize that things are getting nasty out there and there's some trouble brewing, and how did that then affect you both professionally and personally?
Absolutely. Great question. It didn't happen overnight per se, but in a certain respect, it somewhat did. I mean, when you're out there and you're on the front lines, when you're in the forest, you don't necessarily see the trees. So it's super important to, no matter who you are, whether, you're Andrew Raffal or Zachary Kepes, to always have a higher visionary or a picture or a colleague, someone to help give you perspective when you're nestled in that forest, to really see what's going on. Kind of your quarterback, if you're out there playing on the field and you don't have that full vision and scope. And that's why it's important to have somebody like you, Andrew, obviously giving you that different perspective. So me being on the front lines, being deep in that forest, you don't necessarily see it coming on until you start not getting those phone calls for the deals, and obviously the offers are deflected and prices continue. More supply is rising and demand is lower. Simple economics. So it was a very difficult time to transition from a vertical market going up to a market that's stagnant and then, starts to implode massively. And what do you do in those situations? You want to be as conservative as possible, get out while you can, if possible, and take care of your debts.
Were you over leveraged at that time? Were you able to get out? I know a lot of people here
we
lost
were blessed that, we weren't over leveraged at the time. Okay. What happened to us was we weren't holding a lot of stuff, which was good. So in a flip business model, if you're just buying and flipping, you're not stuck with a lot of inventory. Right. So after the implosion, we'll get to it, but that's when I started buying, when I saw somewhat of a bottom. But during the time, it's very difficult. It's like, you're hit with the wave and you're underwater. You're just swimming to get to the top of that, water. It's a difficult time. You're treading as much as you can.
Right. And then the capital is just drying up. banks are calling.
Oh, absolutely.
So I guess the key for you is not being completely over leveraged and not having huge deals that were out there. A lot of maybe smaller deals where some of these developers and landowners, I mean, it's just, was never in a million years would they have thought that it would have happened the way it did.
No, I mean, no one can predict that per se. I mean, there's some economics and theorists out there that may have, but, again, I always say if you could see that, we'd be at Vegas playing on the tables at, blackjack. If we could, everyone always asks me, if you can forecast the future, I'll be at the blackjack or the craps table.
I thought we're getting on a plane after the show and we're going.
I would love to.
All right, you guys get that. So you start then starting to see, obviously, trying to make it through, cover your bills. Things aren't good.
Yep.
And now, all of a sudden, it's what, 09 and 10? And you start, what's going on? You're starting seeing this huge opportunity.
Sure, let's talk about those 2 difficult years. Everyone likes to talk about, the good times, but let's go back to the bad times. Again, it gives you the experience to kind of see and recognize those signals again of the market shift and the change. By hunkering down, literally, I rented my primary house that I lived in. I rented to a Coyotes hockey player. I living in a second home in a bedroom. I was hunkering down just to pay the bills, literally, and just cover my debts. I mean, it was a difficult time. All I knew was real estate, and that's my background, my blood and sweat and tears, as you talked about. So it was a scary couple of years. There wasn't a lot of transactions. There was some short sales. You can pick up some ancillary income through, representation. In fact, I represented you on a great deal we picked up as a primary, I believe, back in that heyday.
Yeah, that was back maybe one of your first deals.
Yeah, on the retail side.
But before we get into the deals, like when you're going through this dark time, right? And there's a lot. It's not like you were the only one.
Sure.
But like, when you're waking up in the morning or you're trying to go to bed at night, what were you doing to stay sane in knowing that your bank account's dwindling? You got all these deals outstanding. You got things not moving. What kept you going day in and day out?
Great question. I mean, you just got to be always optimistic. I think health and mental health, and for me, it's physical fitness. Everyone's got their outlet of stress relief. If I would have done nothing and just laid in bed and fallen into depression, that could have been the worst possible thing. Instead, I got motivated through sport, through triathlon and fitness. And to me, that's what gets that release and that kind of potential anxiety through the hardships that we were experiencing to get out of that funk, if you will, because it was a very, very difficult time. But I remained optimistic. I stayed in good health and physical fitness, cleansed my mind so I could think positively and focused and kind of was waiting for that opportunity to come back into the market to capitalize on the skills that I've acquired and honed in for the last 7 or 8 years.
Yeah, so listeners, that's great advice. And it doesn't have to be a time where it's in turmoil. It's also a time where you're running a business. You got to keep your mind and your body healthy, and you got to eat right, and you got to find what your passion is and focus on that. It's not always about work. But I assume you also kept your network out there too, right?
Yeah.
In your industry, even though everyone's kind of feeling it, keep your network out there, not hide into your room, right, and just not get out there. So that's important. Did you ever think, because I know your brother-in-law runs a DJ company back then. Did you ever think you'd have to go work for him? Was that ever in the mind?
DJ is not my skill set, but, at the time, you do what you got to do. I mean, I was always looking at other opportunities short term, but if I needed to spin some records for my brother-in-law, I certainly, wouldn't be opposed to that. You got to do what you got to do at the end of the day. There's no harm. Again, I remember going on dates with women. Where are you living? I'm living in a second bedroom in my parents' house. No shame in that game. It is what it is. You got to hunker down and do what you got to do to survive.
Right. And with your charming personality, I'm sure they got through that and they know, hey, this guy's going to make it at sometimes. And the one that didn't, then, they'll look back and say, hey, I should have stayed with the guy.
Shoulda, woulda, coulda.
Okay. So we got through these somewhat dark times, and then you realize there's a tremendous opportunity. Single family homes. So let's let the listener know, how bad did things get here from the 05, 06, 07 into then what you were buying through yourself, through investors, 10 and 11. What was that threshold there?
Sure. Great question. So from 2002 to 2007, we were acquiring homes at $50,000, $60,000, $70,000. We were selling them for $100,000. As the market continued to appreciate, it became somewhat of an irrational, exuberant market. We started to get every 1 in 4 homes, if you knew that statistic in Arizona, was bought by some sort of investment company. Okay. So there's a lot of demand. Prices went from $100,000 basically in the lower income and hit at kind of a top threshold of $200,000, $210,000. Those homes at the 210, we were buying those at the very, very end of the market for $150,000, $160,000, putting in $20,000, and selling them for $200,000, maybe make $10,000, 5-6% back in the day. On a flip, it was decent if you can move that inventory quickly and roll it through the cycle. So then fast forward to that times of 2008, 2009, when we kind of hit that bottom. Warren Buffett says when people are greedy, be fearful. Right. When people are fearful, be greedy. we became greedy because those same homes that we were trading at 200 retail and 210, Andrew, now we're trading at $30,000 and $40,000. I mean, they talk about depreciation and getting annihilated.
So listeners, listen to that. 210, and these aren't huge homes. These are like 2,000 square foot homes.
Smaller than that, 1,500, 1,400 square feet, block construction homes, less than the cost of building these properties.
And part of the issue was on those homes that with the no money down and these undocumented loans, people were just buying 3-4 houses at a time with no real income.
If you had a heartbeat, you could qualify literally for multiple homes. You knew if you go to get your haircut and your hairstylist says, I own 7 homes in the subdivision, it may be a signal, ding, ding, ding. If everyone's buying, you know, start running.
That's the same thing as like we had Bitcoin last year. We call it the taxi cab driver, when they start telling you they bought 4 homes or they, tech boom bust. So you can almost see that happen. It's just trying to time it. Right. So you saw this opportunity, but now capital for you isn't there because you've lost all this money from these deals. So we talk about our deal, like when you got back into it and realized that, hey, I need partners.
Sure.
What was that like? How did you think through on what's going to make sense where you're going to do the work and then bring in these partners? Walk the listener through how you kind of pull yourself up.
Absolutely. So we saw another one of my favorite quotes. Peter Lynch says, you don't have to buy at the bottom or sell at the top as long as you get a big chunk in the middle. I'm not a greedy person. I'm always looking to get a decent chunk in the middle. And again, not hit a home run and not trying to swing for the fences. I had a great history of success before. I've never burned anybody. I've never defaulted on anything. And so it was all about what's called OPM, other people's money. So I devised a business model where it's 50-50. I had all the realtor and agent and wholesale relationships to acquire deals, still maintain those relationships that you talk about, even in the downturn. You still want to get up, you wake up in the morning, you maybe do your exercise, you call your colleagues, you call the title companies. What's happening in the marketplace? Who's doing deals? What are the cap rates? What are the returns? So as long as you keep your pulse on the market, and you're kind of watching and staying immersed in that environment, then you're ready to execute. Well, I was ready to execute when, again, we saw these homes trading so low with rents that really hadn't changed from the $200,000 price point down to the $30,000. So if rents were $1,000 at $200,000, but that same home you can buy at $30,000 and get $1,000 in rent, you're getting an astronomical return. 20 plus cap rate, which is a 20%.
Never going to happen again in our lifetime, probably.
I hope not. If it is, that's a buy sign, folks. Go out and buy as many as you can. So that being said, I was stuck. Like you say, banks were nervous. They didn't want a loan on single family because they just got wiped out like most people. And so it was all about where can you get available cash? If there's no loans, you could get potentially hard money. That was super expensive. People are charging 18, 20%. And there wasn't tons of money in that market yet. It wasn't as widely available as it is now. So it all came down to what affluent, high net worth individuals were in my sphere of, individuals that I knew, to call them and say, hey, look, here's the business model that I've created. I'm put together a fund and I'll run the whole thing, take no management fees, no commissions, no nothing. So I have a full vested interest in the deal. And every deal we will acquire, the investor puts up the capital, do the work. On the disposition side, we sell that property and then we split the profits 50-50.
And that was either if you flipped it or the rental, you kept it, and the rental income, you would just basically create a little LLC return. And a return for them. So that's an interesting component there. So you had to deal with a lot of mini investors, even though they're high net worth, but they trusted you. And, we weren't talking huge capital, so people just let you do your thing. Yep. And that's when you started then building this network of, you obviously had a good accountant or CPA to deal with all of those LLCs, all of those deals. Yep. But then with doing all the work, what I think separates you from others out there is that you're able to connect and get the right contractors and be able to communicate with them and get your hands dirty, right? Yep. So that was, did you start building relationships with like one contractor, or was it a combination where you had a lot of different teams out there that were helping you redevelop or remodel or rehab or whatever it may be to get that house up and running?
Yeah, it's all about connections. It's all about relationships, just like in anything. It's, you never want to burn any relationships. Even in the downturn, it's easy to forget about those people that worked with you before constructing the homes. And those guys were kind of sitting on the sidelines trying to make do too. So they were super excited because I maintained and rekindled those relationships that I had prior to the bust. And those guys all of a sudden have cousins and brothers and they see the opportunity. So we were running 6-7 crews at a time.
Wow. After
that market. We were trying again to buy everything that we possibly could. I had deals in escrow that were pre-sold and hedge funds started to come in. So you fast forward a couple of years and it was just a wild, fun time again. This is now what we're talking talking about. We're at the right place at the right time. And I believe in serendipity and things like that and good karma, right? If you don't screw people, you're transparent in your business model, you pay your contractors on time, you take care of your investors, you run good, clean accounting, and you have a recipe for success. And, I'm not the smartest guy in any room. And, my ACT score is nothing, it's laughable.
So you're telling me you didn't have somebody take that test for you? Your parents didn't pay for you to get into, where'd you go, to Indiana?
I went to the Kelley School of Business Finance Institution, Indiana University,
okay, so your
Harvard
ACT
in the Midwest.
I thought that's what they call Miami of Ohio, where I went. We might have to, in the show notes, we'll actually get to the bottom of that, but I do believe it's Miami of Ohio, but that's another podcast. So your ACTs must have been okay. So when we think about then why in your industry, you've been through a lot, you've seen a lot of brokers, you've seen developers. Why do you think a lot of them, the ones that do fail, what do you think that they do wrong or they could do better?
Sure. I think it's all about relationships. I think people a lot of times are short-minded, short-sighted in terms of, money. They only think about the capital at hand. And if they have to screw somebody, I like to call it a zero-sum game. If one person wins and another person loses, no one wants to do business with you again. If you're there to, draw blood every single time, no one, again, zero-sum, it doesn't work.
Well.
Correct.
You take good care of your people, be transparent,
yep.
And, be open and honest. If the deal's not going to work, you can't hide from it.
Nope. No. And so we're here for the long term. We're young guys, aggressive, but always fair. I always look for a win-win-win. If there's someone in the transaction is going to lose, I will walk away from the deal. It's just how it has to be. And that's why I'm still here. There's still a lot of guys in the business that have got out of the business because they only cared about how quick they can make that fast buck. Yeah. Just like real estate, it's a marathon. It's not a sprint. So again, I'm not looking to get rich and I wasn't planning to get rich overnight. It's a long game. It's, like an Ironman. You have to put in the time, the energy, do all the work to get there. You don't just wake up and become an Ironman the next day. You have to go through the training. You have to go through the nutrition. You have to put in the time, the energy, the blood, sweat, and tears to get to that finish line. It's not easy and it's not for everybody. But if you can, execute and stay the path, then you'll be in good shape.
And so, 07, 08, kind of the depths, and then one house at a time. And then ultimately, so you said private equity started kind of sniffing around Phoenix. They had capital started becoming more available, the Fed lowering the rates to basically nothing or negative.
Yeah.
So what happened then? So how many homes did you have or have you at the high point? Can we talk about that or is that a secret?
No, there's no secrets here. This is just an open and honest environment. So I would say, we were flipping up into the markets in 2007. We were doing around 200 deals a year. Me, my uncle, my cousins, and that was a wild time until, of course, the market imploded. Right. And, of course, again, we were not over leveraged, so we really didn't get hurt. I got hurt because I went to diversified investments thinking, okay, I'll get some passive income outside of Arizona because I was worried about our market, and that's what came back to bite me. That's how my net worth was good, and then it just got annihilated because, again, I didn't have full documentation on some investments, and it just didn't pan out for me. And that's a good lesson learned. No matter where you invest or whatever you do, make sure that statute of frauds, whatever you're doing is in writing, you're protected, and you're just fully backed on whatever your investment is. What's it collateralized by? Is there a personal guarantee? How's the company's liquidity? What if you need a capital call? Those are all good questions you need to ask in any investment, real estate, alternative investments, or whatever it is. I'm sure when you're looking at your clients, you say, what is the downside risk of this deal? What's the upside potential? This is what we're looking at, but also, can we lose here? And if we can we mitigate risk? I'm sure that's an important factor for you and your clients.
Yeah. So it was, I guess, your deals that you were actually in control of didn't really bring you under. It was these outside deals.
Correct.
And so, that hits home to what we talk about with our business owner clients and executives that work for a company is, you don't want to have all your eggs in that basket. So like real estate, you had all your eggs in that basket, not real. You were diversified in different deals, but ultimately it all came back down to real estate. So when things hit the fan, then boom, 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 all gone. So that's one thing we preach, whether you're in, real estate, you can turn that dollar into 10 times a lot easier than you going out and doing something else. But you've also realized from that, I assume, that you've got to have your eggs in different baskets and different investments and not just in real estate.
Absolutely.
And that's where a lot of people fall off. We see in these executives that have all their money tied up in their stock. Obviously, we know what happened in 99, 2000, 2001. But, it's easy to kind of drink that Kool-Aid and be like, hey, I know that we're moving ahead and I'm helping the company grow. But then ultimately, one bad or two bad earnings reports, or if they're a private company, everything blows up. So the key is have a game plan so that you don't make stupid decisions or decisions based on emotions or let the markets dictate it. And then all of a sudden, your hands are tied. you're getting a margin call or the banks are calling. So private equity then, they got involved in more so they were looking and saying, you guys have done the hard work. We need yield. We need to put some money to work.
Yep, absolutely. So it was interesting. I mean, these guys all of a sudden came in literally overnight and you start getting knocks. Any single family homeowner that had 10, 20, 30 homes at the time, these guys were targeting through tax records and public records, said, knock, knock, knock. Can I help you? Yeah, hi, we have $1 billion we're looking to deploy. Very funny. I thought it was a joke.
They actually came to your door?
I mean, they don't literally knock on the door, but they were calling my phone.
Basically the
I
same.
was like, can I help you? This must be a joke. Click, call again. No, we're for real. Great, send me a proof of funds. And it's like, they're literally sending you, $300 million in account A. Guess these guys are for real. And so you got to go through the motions. I met with they had all these different acquisition guys and met with them. I said, okay, if you can pay me X and this is what you guys are comfortable paying, which was the top of the market, I'm a seller. Again, you got to know when to hold them, know when to fold them. But if you can buy the base, again, we spoke about it before, Peter Lynch, and now they're offering at the top at the time, you're a seller. If you can make 200% on your money in 3 or 4 months, take some money off the table. Again, great lesson. Don't be greedy. You hit a home run, move on, or what's called dollar cost average into the market. If you can sell here, but you still have relationships where you can buy over here, Andrew, then it's a great spread. And if you can continue to do that, it's a domino effect of great returns.
Yeah, I mean, sometimes it's easier said than done to do that because pigs do get slaughtered. But
Correct.
When you think about the market and how it's moving, people get greedy. So for you to look at that and say, you know what, I'm cool with taking some profits off the table. You can never be mad. You can never look at the mirror and say, hey, I made some money and I took it off the table. Yep. Looking back, maybe you would have held those. You could have had more appreciation, but it would just, also more headache, So unloading that and taking some risk off and allowing you then to deploy capital in other deals, I think it's a smart deal, especially how many times are you going to have a hedge fund be able to come in and say, hey, I want to buy 50 houses at a time?
Correct. I mean, they would do deals 10 houses at a time. You take 40, 50. I mean, at a certain point, I did a 40 home package to a hedge fund, multiple 20s. I mean, it's wild. And the thing was great about it, there's no emotion. If you're going to sell to a typical homeowner, you're going through all these inspections. They, of course, did inspections, which is fine. Okay. But there's no emotion. When you're dealing with just straight Wall Street capital, it's not like, hey, I need you to fix this. If you're not going to put the towel bar, you're not going to, fix this shingle. Great. We just want a $3,000 concession on the price and we're going to move forward and close. It takes away the emotion. It's cleaner. It's easier. You may have left a few bucks on the table, but if you take away that emotional, mental aspect of it and you can move that inventory quicker and redeploy that because you know that you're going to have $4 or $5 million from one quick sale to then go out and acquire new assets, boom, move on. Again, maybe you pick up a few $1,000s or a few points more on a retail deal, but how much time and energy do you expend dealing with that individual agent, dealing with the emotional aspect of that buyer, the negotiation process? So sometimes in this situation, it's much easier when you look at the macro picture to sell to one entity and then continue to grow and redeploy that money in this market.
I will get into some of your social media that you're doing now, but for many years you were not promoting, not marketing. So how did you get the Zach Kepes name out there, the Zak Ventures, all those years, and having people bring you deals? Like what can we recommend to those that are listening? How can we help them make that type of network happen?
Sure. It starts it's all about reputation and execution. I mean, I got to say, it really boils down to transparency, ethics, execution, communication, relationships. I mean, that's what I built from the ground floor, just like our friendship, If someone brings me a deal and is a Midwest guy, I like to say that, again, I see it out here. People are somewhat lazy in business out in the West. We come from that Midwest hustle. So you come out here and hustle. You're the first guy to that house and you call up that agent, I want the deal and I'm sending in the offer and you execute. People love that. So if you treat people well, you have fun with what you're doing, and again, you get it done, you don't do what's called retrading, people want to do more deals with you. They know that you're going to close the deal. There's going to be no headaches. And so who doesn't want to deal with people that are executing in that capacity, are fun to work with, and are persons of their word and integrity?
Yeah, and getting things done. It's amazing all the success that you've had and you continue to have. If somebody were to look at you and not know that and just watch you or follow you for a day or 2 days or a week, they'd probably think this guy's just trying to make it, right? So it's one of those, it's a motivating factor. Financially, you're independent, but it's like that drive is just, you must be having fun still, getting out there and doing it, closing the deals, finding the deals, helping people, but you're also putting people to work too, which is cool. I mean, think about how many people over the last 10 years that you've put to work and what do you think? Hundreds of people, right? Through all the labor and the construction and the different financing and so forth. So that's, it's kind of like you're running your own business, You don't have any employees at this point?
They're all 1099. I mean, I have an assistant, bookkeeper, and things like that. But again, they're all like family. You treat them well. They're all independents. It's like a big game of Monopoly, but it's real money. I wake up every day, I'm blessed. But I go with the mentality. I like to say I wake up broke in my mind every single day. So you wake up and hustle. It's kind of a unique mentality to keep. You wake up, set the tone for the day to work out. If you look at your bank account and you take one with a zero and you say, today, if I don't work, I'm not going to eat, you're hungry. You got to make good business decisions. Have some fun.
So, what I've noticed for you over the last maybe couple of months is that you've looked at now trying to get the brand out there, the Zak Ventures, and using social media, whether it's be Instagram or Facebook. Back a couple of years ago, I don't think you'd even do a podcast. So What changed on there? And you're having fun doing it, but like what's going on? What are we trying to accomplish with getting you out there and doing those videos and having fun and showing your personality and your work ethic?
Sure. You have to adapt to the market. I mean, social media has always been around, but it's always progressively getting more and more adaptable. And you have all these young hustlers that we started when we were, early 20s. These guys are out there with the Instagram and the podcasts and, these big shows. And, I was always deflected from that. I always like to stay under the radar and I like to be humble. And you can still be humble with your social media and whatnot. And you don't have to show your material possessions because no one really cares about that. If anything, people kind of get deterred from it. But again, that's just my opinion. I think, like you said, I roll around in my Prius, stay humble. I'm not a showboat kind of guy. It's not my thing. But again, I see the success that these young guys have, and this is kind of the wave of the future. You have to put yourself out there and continue to grow your networks. As we progress in our careers and our business models, some of these older people are getting out, and it's these new young guys that are in there. And if we are slow to adapt to this new social media platform, we may be pushed aside too, as these guys are getting deals and doing their unique advertising. I'm not advertising direct to homeowners. You say, what's the benefit? The benefit is to connect with more wholesalers, these young guys, which are leveraging the social media to get more deal volume, which is good. Also, look, when you're out there and you have good branding, good presence, you get referrals from people, people that may get a massive deal, and I may need to raise a massive amount of capital. If I'm staying in touch with people and there's a unique opportunity to put together some sort of alternative fund for a major distress portfolio or commercial or apartment building, guess what? Those relationships are there. So you never want to burn any bridges. I continue to grow, adopt, and just think about the future.
And you're able to put your real personality out there. I know, social media, it's not for everybody, but you're able to do quick little snippets, people get it. I think I just saw one recently where you did this, you call it trash to cash?
Trash to cash.
And so you were inside somebody's house. You had a suit on, like a ghost. What was that? That was it was a hoarder's house?
Literally. I mean, we buy, the more distressed it is, the better. So we like to create value from the ground floor. So a lot of times, if it's disgusting and there's hoarders or cats or dead bodies, we've seen it all. So if we can come in there and clean it up and literally create value through rehab, through good economies of scale, that's how you create value. So trash, literally, that we're buying, turning it to cash to create some sort of annuity of cash flow through rentals, we're flipping it. That's kind of the real business model. And a lot of times, I'm always a jokester, class clown in high school and whatnot. You got to have fun with what you're doing. And so I was making these mockery videos just as a joke on Facebook, but people loved it. I mean, for whatever reason, they're attracted to, because I'm real, I'm raw. And I'm like, wait a second, if I do a little more of this, it could just be, again, beneficial, but in the right taste and the right capacity. And I've gotten agents who have called me and said, I didn't realize that's what you did. If you get one extra call or one extra deal, what does it cost to put a 10-second video, out in social media? Zero. I spend $0 on social media, and I pride myself on that. So if you can self-generate deals and revenues from authentic media and social media, what a blessing.
Yeah, and that's, that what you just said earlier is that they didn't know that you did that, and that's something in any line of business. You got to make sure your clients or your people or your network knows what you do and who you want to work with. Even in our industry, let your clients know that you're looking for like-minded, not, hey, give me 3 names, but it's, we take good care of you. Is there anybody that's out there? We're looking to take on clients like you, making sure people are aware of that. And social media allows us to do that. Where we're not selling, it's more of let's push out good information. Yep. Let's do things like the podcast or, different blogs and books, and then let people learn about us and learn about you, and then they can come to you. So you're actually starting to see some results already from the...
I love it. It's a great point. I mean, when you talk about it natural, I don't push anything on anybody. It's like, I like to use the word organic. Things just evolve naturally, organically. If it's meant to be, it's meant to be. You're going to connect with certain people naturally. If they see that, again, you're buying distressed assets and they thought you're just a realtor or something, they're not going to call you. But if there's an opportunity, they say, hey, I've had a lot of agents say, hey, I didn't realize you could pay cash. You can close quickly. My clients are getting divorced. Would you be interested in this deal? And again, a simple phone call, we'll let you know right away.
Now, you weren't, when you went into that hoarder's house, you weren't actually going through that crap in those piles, or were you?
I mean, a lot of it was social media based, but I would help my guys I have the suit.
Yeah.
So you're helping a little bit. On Amazon. But again, I'm not out there doing the work. Yeah. I credit my guys for that. But I have no shame. If somebody needs a hand, we'll clean it out. Put on the gloves. We'll get into the thick of things. I have no problem going knee deep into the junk, into the trash.
And I thought what was cool in that video is that you were who I think somebody passed away, but then with the family, you're like, we're going to, whatever we find in here that's valuable, we're going to set it aside and we're going to give it to you. So that's
and we
neat.
Did actually. Yeah. It's crazy. I mean, if I'm buying from a wholesaler and the wholesaler has a relationship with the seller, because a lot of times I won't interface nowadays with the previous owners. So they bring me in, they what's called assign me the contract in a wholesale relationship, which we can talk about later. But I won't have that interaction, so I don't have the relationship with the seller, but I will have that with the wholesaler. But I'll give you my word, if we come across something or value for the family, which we did, we found $5,000 of savings bonds that the owner had in a corner in some bucket or something that we sent out to the family. I mean, it was an unbelievable story.
That's great. Yeah. And that's the type of stuff that sets you apart.
Right.
How many people would have maybe just pocketed that and so forth. So
sure.
Those are the type of things you got to keep doing. So when you think about, advice that was given to you, whether it's family, friends, contemporaries, I mean, what is some of it's any best advice that has helped you excel in what you're doing professionally and personally?
I mean, stick to what you know. It's easy to kind of, get distracted in life, and you hear about your buddy making money selling diamonds, or, your buddy's doing stocks, or stay the course. If you're good at what you do and you're passionate about it, there's going to be trials and tribulations and hardships. But if that's your passion and you're good at it, stick with it. I was great at real estate. A very close friend of mine, Isaac Scheibel, I think you know him. Yeah. Again, in that difficult time, 2008, I'm like, I don't know, it's easy to run or wait for the market to turn. It could have been 4 or 5 years. He's like, dude, you're great at what you do. I'll even invest, I'll invest with you, but stick with it. You're amazing at it. So a lot of times it's easy to get discouraged. Again, I like to use the analogy of a marathon or an endurance event. There's going to be times during that 4 hours or 5 hour run or a 11-hour race that you feel terrible and you just want to pull over and take a nap or just throw in the towel. Keep moving forward. I mean, it's like a lot of times your mind plays games on you saying, oh, pull over and go. But your body has the ability to keep moving forward and executing. Stay the course. Also, treat people the same way you want to be treated. Don't screw anybody. I mean, it's a small world. You do one, can I swear on here?
You can do anything you want.
You do one shitty deal and you burn one person, it's going to come back to you. So I believe in that karma. So if you have a very good reputation, you execute, you treat people well, the same way, again, when I went out and I lost my money through poor investments, and I went out there to raise OPM, the other people money. And I'm sitting on this side of the table saying, hey, I've been in your seat. You invested with me before. I'm going to protect you. And here's the protocols we're going to put in place to make sure you're protected. That's super important. So you can relate and connect with those people and know that they're going to be secure in that investment.
Now, you're saying OPM, you're not saying OPP?
Down with OPP. Yeah,
so you're not saying that. Okay, so
OPM.
Money. Got it. So, I think, when you're passionate, you've done some Ironmans in the past.
Yeah.
You doing any coming up?
Once an Ironman, always an Ironman. But, maybe in the future. It's a very selfish sport. Takes up a lot of time. I'm just a deal junkie now, just trying, continue to grow and buy. You talk about mission. I want to continue to grow my rental portfolio, do more flips, make sure my guys stay busy, and continue to have fun, You got
to have the time you got your dog. You can't, you have to have the time for the dog. You can't
Absolutely.
be doing Ironman. It's just incredible to think that you are able to do it and train for it. I just don't get it.
Anybody can do it. Again, it's not like it's something. It seems crazy and outrageous, but nowadays it's very achievable. But again, it's not like you just wake up and do it. You have to have a plan, just like in business, a system, a coach. That's why people, even myself, need guys like you to quarterback. I followed a protocol. I didn't just create my own training and say I'm going to become an Ironman. I looked at the professionals and said, what are these guys doing? How many hours do I need to swim, bike, and run? What do I need to eat? Even today, I'm heavily invested in real estate and I have some equities, but I call you and say, Andrew, what am I missing? Here's my yields I'm getting today. You're an investment advisor. What piece of the puzzle am I missing? So it's important to have a quarterback like you to make sure, again, that you're looking over my forest when I'm nestled in that tree is to make sure I can navigate my way out.
Yeah, and that in our industry, it's changed so much over the last decade. It's not just about the investments. It's when you work with a planning firm, it's helping, like you said, look at the forest or coordinating, acting as that quarterback, making sure the tax planner is working, the estate planner, and looking at ways to help minimize taxes. A lot of our clients,
Absolutely.
Business owners, entrepreneurs, in the real estate side, we're again heavy in real estate, but they're getting crushed on taxes. So. Yeah. things setting up, whether it's a solo 401ks or defined pension plans, how you can put more money in your pocket, much more than, hey, did we beat the market? Overall, we know what the markets are going to do what they do, and we know we're not going to hit the home run. We don't want to strike out, but last quarter, tough. But when we have a game plan and you have those pieces together working in unison, that's where you set that value. So you listeners out there, when you're working with your team, just make sure you got a trusted team, whoever that is, and not somebody who's trying to sell you something or one guy over here, a gal over here. Nobody's talking. If nobody's talking, how that's going to help you, especially if you're running and gunning and you're a business owner, you're an executive. You barely have time for yourself, let alone your family, let alone getting your retirement plan in place. So it's on all of those aspects. In the real estate field, it's make sure that you connect yourself and put yourself with good people, right? I'm sure you've had people over the years, you're just like, I'm not working with that person ever again.
Absolutely.
Whether they, right, wrong, or indifferent, they do you wrong or they're dead.
Absolutely. I had a wholesaler guy call me yesterday. He's like, hey, I just got a call from this guy. He's looking to buy and hold. I said, oh, it's a small world. How many he's looking to buy? He's like 20 to 30. A guy says his name's start running. It's a small world. You're just not going to do business with people that, have poor reputation. So it's super important.
Another thing, traveling I know is big for you, right? You try to get out there and
I've traveled a lot before. I love it. I think a lot of people are ethnocentric and, they really just about the U.S. I think you learn a lot by individual autonomous type travel because it forces you to engage with other cultures, societies, foods. I speak Spanish, which is, very favorable in this market in Arizona because I have a lot of clients that, and renters that are Hispanic. A lot of the contractors are Latino. So it comes in handy. And there's that mutual respect. If you can communicate with them in their language, people love that. It's a true connection factor.
And for you being a mentor out there, a young guy, gal, getting into the business, is that something that's a passion for you to be able to get out there and help somebody else become successful and teaching them the ropes?
Sure. I've had a lot of calls. I've had an internship or two where guys have emulated my business model, came out, taught them some fundamentals. I'm slammed, but I'm always happy to pick up a phone. Anyone calls, they have advice on a deal, or is it a good buy or a bad buy? I'm always accessible and available to help anybody that wants to underwrite. I mean, I know the Arizona market, so I've had calls, hey, what do you think of this deal in California or New York? No clue. You want to find a local expert.
Sure.
It'd be like my buddy telling me, hey, go buy this stock. I appreciate the advice. Let me call Andrew. Let me get a professional to evaluate that and make sure that it's a good opportunity. It's funny how people can make irrational decisions. I heard that this is a great company. What are the fundamentals? There's a lot of misinformation out there. Again, so it's always good to ask an expert in that domain. So you want to talk about single family, distressed real estate in Arizona? Give me a call. You want to talk about equities and a quarterback for your whole financial and tax planning? Call Andrew. That's why it's super important to know who are those experts in those domains and those niches.
Yeah, I mean, you think about just even last year, 18 months ago or so, Bitcoin, right? Bitcoin was one of those boom busts where everybody was seeing all these people making money, and then they just, hey, I'm going to jump in and I'm going to be able to turn my 10,000 into 200,000, and everyone just got crushed. So usually when you hear that type of galloping into it, the top is in and it's time to run.
Absolutely.
So then we don't know what the next one will be. I know a lot of the listeners out there, when we think, I know you can't predict the market, but what are we feeling right now with regards to not just the Phoenix market, but what are you feeling in regards to the real estate market, both Phoenix, East Coast, West Coast? Where are we right now in the cycle?
Sure. From a macro perspective, I mean, look, we've seen a lot of appreciation from where we saw at the bottom. So looking at a snapshot of where we were from 2009, fast forward a decade later, I mean, we've seen massive recovery. I think we're going to see, I'm cautiously optimistic about the market. Again, if I could predict it, we're going on a plane to Vegas in 5 minutes and go put it all on black. But that's not the case. I always look at what's the downside risk. Forget about Bitcoin. I don't want to take, these crazy risks. I don't need to try and make $2 million in, 50-cent investment. Too much risk for me because the zero-sum game on that, I'm losing my 50 cents, and that 50 cents was important. I care about if the market does turn, whenever I'm buying in today's market, what will happen if the market value decreases? Where do I see the rents going? And rents are super strong because if less people are buying, there's going to be more renters. So there's somewhat of an inverse relationship. So if there's a correction in the market, meaning pricing coming down, there's going to be an increase in the rental value because more people are going to be on the street looking for rental opportunity. So as long as you could stay the course or you have calculated leverage, meaning you have borrowing money from a bank at a reasonable rate and you can outperform that, then you have stability. A lot of people got in trouble before because they had hard money. At 18%, the market drops. So there's a capital call on it. and all of a sudden you're done, or the money's coming in and you were buying that asset just because you thought it's going to continue to appreciate. I don't buy based on appreciation. I buy based on what's my cash on cash return in today's market. And even if it went down in my capital invested, what will be my yield? Because if you look at someone who held in 2007 to today, they would have been fine if they would have stayed the course. I think that's kind of a theme that we're deriving today. Stay the course.
Yeah, because emotions get in the way. And that's why if you have a trusted partner working with you, they can help you not make those rash decisions.
Yep.
One thing we read about these millennials, right? And like, hey, they're never going to own homes. I'd love to get your feedback on that, because I personally don't think that's the case. They're going to have families. They're not going to want to live in an apartment. They're not going to. But what do you think? I mean, the millennials, we as the Gen Xers are kind of sandwiched in between there. There's over 80 million of them.
Yep.
You think they're going to drive this market on the residential side over the next 10, 15 years?
I mean, I certainly hope so. I think that, our economy is still pretty stable right now. I think that at a certain point, they're going to realize that they're not really building anything for their future. I have this conversation with a lot of those types of people that rent from me. I'm like, look, I love you and I'm happy to, continue to take your monthly rental income, but you've got a great job. I'm looking at your application. What is your goal? I mean, I interface with these people daily and I say, hey, Paul and Julie, what's your game plan? You want to just rent forever? I mean, you're paying $1,500 for rent. If you were to buy this exact home, for example, your payment would be $1,200, $1,300. Well, we're not sure. So there's kind of that ambiguous delay. But I'm a believer that through proper coaching and understanding of wealth building, that they will buy. I think they just need to have a little more education out there. But I'm not sure what the fire is for these people. Like you said, I don't know if they're just passive, or maybe it's the environment that they grew up in, or they're fearful because they're just coming out of our market where they saw the markets tumble, and there's that fear factor, right? So it's not for everybody, but I'm hopeful, and I try and coach these people and tell them, look, again, happy to take your monthly income, but I'd love for you to buy the house, build something for your family, a legacy.
I mean, and rates are so low right now, and just this last pullback we saw in the 10-year Treasury, rates are down to 4.25. Even at 5, that's still historically low.
Correct.
So we want to lock that in. But ultimately, it comes down to that decision of maybe they just want to be free and clear and not have to worry and be able to go to the next thing. But I think overall, life happens and you want to lay some roots.
Yep.
You want to have a family. But I guess that'll be to be seen. Same thing on like the retiree market. We're seeing more and more people that are selling their house, downsizing, and then they're just like, you know what? I don't need to own.
Yep.
I'm going to have a turnkey. I'm going to have that. I can go to the airport. I can go here. I can go here. So when we have clients come to us and say, hey, what should I do? We want to walk through and look at the emotions and just know this isn't so much needs to be an investment for you anymore.
Right.
Or if you've got $800,000 in your house, should we unlock that and downsize? Do you really need the 4,000 square foot house that has the 2 floors?
Right.
So there's a lot of what that's going to do is change the markets. But overall, Arizona, they're moving out here left and right every single month. So they're building. Eventually, they'll get to a point where they're like, it boom bust.
Absolutely. I mean, talking about, these retirees, it's funny. I have a unique strategy that I'm happy to share. So we have a place called Sun City. It's a 55 plus community, big area out west in the Northwest Valley.
Yep.
And there's a lot of homes that are just older. They're built in the 80s or 70s or, 60s, and they need massive remodels. A lot of people don't want to buy them because there's a big transfer fee. Even if you're an investor, you buy them, it's $3,500 transfer fee, you lose up front. So people are fearful of that upfront money. But at the end of the day, some people come in there and put some lipstick in there. My philosophy is spend money to make money. So I'll come in there, gut these houses. If my grandmother, I wish she was alive, was out there and I wanted to provide a nice housing for her, I want her to live in a really nice place. If these are going to be her last years in her last home, why not provide something that's beautiful that she can enjoy? It doesn't have to be big. We're not talking 3,000 square feet. We could talk about a 1,200 square foot, 2-bedroom, 1-bath, something that's manageable, like you say. And if she can unlock that you're talking about, a lot of them are cash buyers. Let them live in a little luxury. Enjoy your life. For the payment differential of, $200 or $300 more, a lot of them are cash. What's the difference? You know?
And they're not going to, ever go through their money anyway, but Correct. It's just getting them to envision that. And some of them grew up in different eras where they just held on to that money. So It's just teaching them and having them, hey, what makes you happy? Right. Visualize it. What makes you happy? Same conversation we have when somebody's getting close to retirement.
Yeah.
What is, financially you're set, but what do you want to do? What's your purpose? Right. And if you don't think about that, we have it time and time again where somebody comes back in 6 months later, it's like, I went back to work. Yeah. And it's either because they lost that purpose or they haven't been spent that much time with their spouse for years. And It's like, I got to I got to get out,
right?
Or I'm going to lose the marriage. So many different factors there that are involved. So in different life transitions, it means something different. So, if I'm in the real estate industry and who would contact you? Like, what would be the person you're looking for? You're looking for wholesalers? You're looking for
Yeah. So for me personally, look, if you're an agent and you have a client that wants an off-market deal, you're tired of competing on the MLS. If you want a really quality turnkey product, again, I'm of the mindset where we spend money to make money. So all my homes are always turnkey. We're doing quartz counters, high-end cabinets, new flooring, plumbing, roofs, the whole thing. So we're providing a turnkey product.
So when you say off-market, walk us through what does that mean?
Sure. I'm buying 8 to 10 homes a month. So if you're an agent and you're in my relationship, team scope, exactly. You say, Zach, what homes do you have upcoming? I will list them. So they're off market until they actually go on the market, which is the MLS, the multiple listing service. But if your client has the first opportunity because we have a relationship, it says, here, I have this home coming up on 88th in Peoria or 102 in Sun City. And you can bring that to your client prior to the whole masses of the entire, Arizona population to see it. You're providing value to your client based on leveraging our relationship. So that's really nice. So if you want to be in that, team, if you will, reach out to me or let me know what you have, what you're looking for your clients I can buy. I'm always looking for wholesalers, guys that are out there they don't have the capital, but they have a deal that they can tie up. I'm looking for the agent that has distressed or motivated sellers that they want to make the full commission. I'll pay them the full 6%. They get paid by the seller, but they're going to keep my 3%. I'm licensed, but they can keep the full commission. So always looking to get more and more deals, build more and more quality relationships. People that can execute just like us is what I'm looking for.
Yeah, I mean, if anybody's going to do it right and do good by you, it's you. So, in the show notes below will be, ways they can contact. I know some of this will be on your social media as well, but you're doing some awesome stuff out there. And, I think you just continue doing what you're doing and leading by example. And that's some of these things, these younger, brokers and real estate, they can learn from that. So, that's a testament to you. So I know we've gone through a lot. We've talked about our work ethic growing up in the mean streets of Cleveland and Detroit.
Yeah.
You pulling yourself up off the ground, 2007-8, when most would have run, and you stayed and you said, I'm going to do it. And you figured out there was a niche and there was an opportunity and you made it happen. And now fast forward, 8-9 years from, and you never, looking back, you probably never thought you'd be where you are today, but it didn't happen overnight, just like training for the Ironman. But you've done it all, and now you're kind of writing that next chapter. So as we end today, what last bit of advice would you have for the Your Wealth and Beyond podcast, Zach?
Yeah, with us? Again, it's been fun. First of all, it's great to surround yourself with great people like Andrew. Your sphere of influence is always super important. It's always it's your team. You always want to, again, have those people that you want to be in that forest with to help you navigate through, those hardships and the trees and the foliage. Execution, again, we spoke about those relationships. Maintain those relationships. You never know when those are going to come in hand again. Rekindle old ones that you people in that business. You may have done a deal with somebody. Reach out to them, talk to them. One phone call, it's simple. And then stay abreast of what's, happening in your niche. If it's real estate or finance or marketing, whatever it is, if all of a sudden the new stuff is social media, adopt it. Don't be afraid of it, but embrace it, learn about it, and transition with those movers and shakers. I think that's super important.
Love it.
And have fun. Have fun. Like, this is a blast. You got to have fun.
And if you don't have that passion, find it, and it's something you don't want to look back your last days and be like, I should have done that.
Right.
Make it happen. You can make it happen. I know life sometimes gets in the way, but like you said, I think you've been having fun since 2002. Some of those years it wasn't fun.
Sure.
But you were in an industry that you could excel in and that you enjoy, and then having the personal relationships and doing the things that make you happy.
And stay the course. I think that's kind of a theme that's popped up a couple times. Stay the course. Again, like anything else, nothing's easy. A stock doesn't rise every single day. It's easy to be discouraged by, small fluctuations and volatility. But if they have the core principles and that core success, stay the course. Make it happen.
And surround yourself with a good team.
Absolutely.
You can't do it alone. Yeah. Family, your contemporaries, and then on the professional side, people that are smarter than you. I always look at that. Let's bring in people that are smarter than me that can help lead.
Absolutely.
That's key. So I think we should definitely do this again. This has been awesome. Our flight leaves in about 10 minutes or so, so we got to get out of here. But thank you, everybody, for listening to another episode of Your Wealth and Beyond. Stay tuned later this month. We'll have some great shows lined up. Happy planning, everybody.
Thanks, Andrew.
You're welcome.
Thank you for joining me for today's episode of Your Wealth and Beyond. To get access to all the resources mentioned during today's podcast, please visit Baintree.com/podcast. And be sure to tune in later this month for another episode of Your Wealth and Beyond.